Dear students, in the present lecture, we are going to learn scope of auditing, limitations of auditing, and difference between accounting and auditing. Myself, Professor Dr. V.K. Sawant. Firstly, we are concerned with scope of auditing. An auditor plays major role in audit work. An auditor certifies correctness of books of accounts and detects errors and frauds committed in the business organizations. Business organizations are the organizations which are providing different type of services to the society. Auditing is mostly related with protection of owners. It means in organization there are different employees are working, and for checking their performance as well as accounting treatment made by them is to be seen in auditing. There are three important aspects. First aspect is bookkeeping, another aspect is accountancy, and last aspect is auditing. Bookkeeping is a practical approach. Prime entries are recorded in bookkeeping. So bookkeeping is the primary work. It is clerical work. It is carried by an employee of the organization. Accountancy is a theoretical aspect. In accountancy, financial transactions are recorded, summarized in prescribed and systematic manner. It includes preparation of ledgers, trial balance, and final accounts. Final accounts, that is known as accounts which are prepared at the end of the year. This final account shows performance of the business. There are two important financial statements in the business, namely profit and loss account and balance sheet. Profit and loss account is also termed as income statement. Profit and loss account indicates either profit or loss of a year. Balance sheet is a financial statement which shows assets and liabilities of the business concern. Auditing is an analytical aspect. It means that analysis is to be done in auditing through auditor. With the development of industry and trade, presently we are living in the industrial age 4. Bookkeeping and accountancy have separate functions. Accountancy begins where bookkeeping ends. It means after completion of bookkeeping, accounting works start. Where accountancy ends, auditing begins. It means where accountancy ends, auditing starts. After completion of account writing work, auditing work starts. It means that after completion of accounts writing work, auditing work is started. Basically, audit was confined to cash receipt and cash payment. It means that auditing basically focusing on financial transactions occurred in the business. In the present days, due to advancement in commercial activities, the scope of auditing is becoming wider. The scope of modern auditing is beyond the statutory requirements or books of accounts. It means in-depth inquiry is essential in auditing because in auditing we are going to check financial aspect of the concern. Auditing is essential to both type of organization such as business organization and non-business organizations. Business organizations are carrying certain activities for the society, but the intention of establishment of any business is to earn profit. Earning profit is the philosophy of the business. On the other hand, non-business organizations like local bodies, government, trusts, they have also preparing their accounts, and these accounts are to be checked in auditing. The scope of auditing is concerned with systematic review of organization activities. In auditing process, an auditor looks the various activities carried by the business organization, whether the business is following the statutory requirements as well as the business is working for well-being of the society. Therefore, each business have different activities. By taking into consideration the nature of business, activities may vary. In auditing, auditor also measure the performance of the activities. It means the auditor firstly points out what are the sound points of the business, what are the weaknesses of the business, what are the opportunities to the business, and what are the threats to the business. Especially, auditor is concerned with to find out errors and frauds committed in the business organization. In identifying opportunities for improvements, auditor is a guide, philosopher, and he must give his guidance to the organization for its improvements, and auditor should also give information to the organization what are the opportunities to them for making improvement in their business activities. Application of new methodology for further actions. Change is the law of life. Change is occurring in every field, so new changes must be adopted by the business house. The purpose of auditing is bring to notice of the administrative lacuna in the rules and regulation and lapses, and to suggest possible ways and means for the execution of plans and projects with the great expedition, efficiency, and economy. There are certain objectives of the business. The business should bring economy in its activity. The business should follow the efficiency in its activities so we can compete to the others. The scope of audit is also related to review of costing records. In costing, there are three important aspects: cost, costing, cost accounting. Audit is not confined to financial records only, but it also covers cost audit. In cost audit, auditor should know that the what are the prime cost of the products, factory cost, cost of production, total cost, and earning capacity of the business. In management audit, we can compare the performance of management, and also another type is covered in under the scope of audit is government audit. It means that type of audit is concerned with government activities and it is carried through government. Now we relate to limitations or disadvantages of auditing. Auditing has many advantages, but another side of coin, it means we are now concerned with what are the limitations of auditing. First limitation or disadvantage of auditing is the auditor has right to express his opinions only. Only he suggests what are the good points for our improvement, but he has no right rather than suggestion or opinions. Another limitation of auditing is chances of undisclosed errors and frauds. The undisclosed errors and frauds may be remain if the auditor has not pointed out that point, and this is not good for the business organization. In case of auditing, there should be lack of proper care and skill. If the auditor has not taken proper care and not applied his intelligence or skill, the purpose of audit should not be complete. Opinion cannot be given on managerial efficiency. So auditor focusing on financial activities and measuring the performance in terms of financial activities, but he does not make more suggestions to the management because management is the top authority. The auditor has no control over past activities. In accounting, there is a correlation with history. In history, we are recording the things happened, events happened, as well as in accounting, we are also checking the events happened or events occurred or events recorded in the business house. Therefore, the auditor has no control over past activities. These are the limitations of the auditing, but limitation is the another side of the coin. But the auditor is beneficial to every type of organization. It means the advantages are more as compared to limitations of auditing. Presently, we are discussing what is the difference between auditing and accounting. So there are various factors which are very important to make comparison between accounting and auditing. Auditing is a process. It includes recording of transactions happened in the business organization, classifications of transactions, summarizing the financial transaction in a significant manner. It means that accounting is a processing work, it is systematic work, it is prescribed work, and it is to be done in significant manner. Auditing is a critical examination of the transactions recorded in the books of accounts. From this meaning, we can clear that auditing is an examination of financial transactions recorded by the business organization. Another point of difference is nature. Accounting is a routine work. It is also called as day-to-day work. It is concerned with finalization of final trading result. By preparing accounts, we can say that this is the performance of our business. Auditing is an intelligent work. It is concerned with establishment of reliability of financial statement. The auditor has required to express his opinion about financial position and financial transactions of the business. Object. The prime object of accounting is to prepare final accounts of the concern. For preparation of final accounts, various recording, summarizing, analyzing events are considered. After this, a business house can prepare its final accounts. Final accounts are giving the information about the financial performance of the business concern. The prime objective of auditing is to see that whether profit or loss is calculated according to accounting principles. Accounting is to be done as per the principles. The accountancy principles include four facts. One is accounting concepts, second one is accounting principles, third one is accounting system, and fourth accounting standards. Also, whether the balance sheet shows true and fair financial position of the concern. Balance sheet is a sheet of balances. It shows the financial position of the concern as on a particular date. Scope. The scope of auditing is limited to books of accounts only. Accounting is related to preparation, analysis, and interpretation of account. It also includes preparation of final accounts. It means that the scope of auditing is limited uh, as compared to auditing. So, scope of accounting is related with accounting work and preparation of final accounts. On the other hand, the scope of auditing is beyond the books of accounts. It means that the scope of auditing is wider than accounting. The scope of auditing is concerned with examination and checking of accounts, vouchers, and other relevant records. It also includes physical verification of properties. In auditing, auditor is conducting examination of books of accounts, vouchers, and other relevant records of the business house. In addition, an auditor also see that the physical existence of the properties held by the business organization. Another factor of difference is starting point. Where bookkeeping ends, accountancy starts. But in case of auditing, we can say that where accountancy ends, auditing starts. It means that there are three important aspects. One is bookkeeping, another is accounting, and third one is auditing. Employment. Accountant is an employee of the enterprise or organization. An accountant gets remuneration of his work in the form of salary. So, an accountant is an employee of the organization. On the other hand, auditor is not an employee of the enterprise or organization. He is independent person. Auditor is appointed to protect the interest of owners. The auditor gets remuneration of his work in the form of fees. Then report. Accountant is not required to submit his report to external parties, but an accountant is required to submit his report to internal purposes to the organization. But it is noted that auditor has required to submit his report to the appointing authority. If the auditor has appointed by the members, it is the duty of the auditor to give his work report to the members. If the auditor is appointed by the board of directors in some cases, it is the duty of an auditor to give his report to the board of directors. If the auditor is appointed by the government, it is the duty of an auditor to give report of his work to the government. Responsibility. Accountant is responsible to the management. It means that the responsibility of the accountant is related to management only. Auditor is appointed by the owners or shareholders. Therefore, he is responsible to appointing authority. So, auditor is responsible to his appointing authority. In this way, in this part, we learned the scope of auditing. The scope of auditing is beyond the accounting. Also, we learned what are the limitations of auditing. Though we learned about the limitation of auditing, but we trace out that the auditing gives more advantages to the organization for protecting the interests of the owners. And lastly, we learned the difference between accounting and auditing. Accounting is a process, auditing is a critical work. Accounting is concerned with recording, auditing is concerned with checking of records. Auditor is a third person, but accountant is an employee of the organization. An accountant is responsible to the management, but an auditor is responsible to appointing agency. In this way, we get certain information about scope, limitations, and difference between accounting and auditing. Therefore, I am concluding my speech on that part. Thank you.